Fair enough. So today's session, we are gonna discuss about fund analytics, the overview of the fund analytics, and we are gonna look into some categories of the funds, such as maybe an equity fund and a debt funds, or we can also look into the hybrid funds as well, and how the analytics are turning out to be in engine markets, and how we can explore this analytics and how this analytics will be useful when we are taking decision as to which particular mutual fund we should suggest to our clients. And then we are going to have Q&A sessions, and in the Q&A sessions every questions will be definitely be answered. So I hope everyone has come on board, and let's start with the session. As I can see, few participants are still joining. Till then I will just open my screen up, and so this is the engine market screen, where you can see the markets tab and everything. So we will definitely skim through the entire market levels later down the line, but as of now we are just going to look into the individual fund analytics, because today that is our main use case. So what we can do is how to actually activate the fund analytics. So there are two significant ways. One way is you can even go to the fund section and click on those funds. So let's say you are into the screener tab and you want to just look into those fund analytics of those particular funds. Then you can directly click on that and the analytics will open up in another separate tab. So as you can see, Kotak Balance Advantage has been opened into the separate tab. But let's say you want to open this analytics on this particular page itself, then what you can do is you can search this funds. So for searching the funds, all you have to do is type in those funds. Let's say I'm typing Access Blue Chip. So this equity funds will be fund will be analytics will be visible to you in this tab itself. Now let's explore a little bit of an equity funds analytics, and then we can go into debt fund, and then we can explore that as well. So within this Access Blue Chip Fund, we have given a lot of things where you can actually see how the AUM has been, growth of the AUM. So if you want to see the growth of AUM, you can click on this tab. And this is the entire thing which shows you the entire growth. And here you can download this into an Excel format. So it will show you in crores that how much growth has been done. And here you can see the YTM. Now this YTM will be shown only in the debt or in hybrid funds. As of now, if I click on this, it will just show you zero. But as this particular equity fund doesn't contain any debt securities. Similarly, we have also given fund options where you can change the fund options here itself, so that you don't have to go again and search those funds. You just have to change the fund options. And we have given the benchmarking buttons here where you can change the benchmark. Now the thing is, we have seen the portfolio's performance in our previous session. This session we are going to see how the fund performance are affecting the benchmark, and how we are actually comparable with the benchmark. So to analyze the fund performance, what we have to do is we just have to see this fund performance tab, and here within the benchmark we can see what is our cumulative return. So this is the performance statistics given here, which gives us an overview of our underlying returns and the risk. So you can see the returns accordingly for 1 year till 5 year, and you can even see the annual volatility, the Sharpe's ratio, the Sortino ratio. So as Sharpe ratio gives you the risk adjusted return, and you can see the underlying risk of this particular asset. So the risk of this asset is the value at risk model, which shows you that there is a 5% probability that this particular fund can have an annual drawdown of negative 23.90%. Now you can change this probability as in the confidence interval. Let's say you want to have a probability of 1%. All you have to do is you just have to type in 99. So this is the worst case scenario, that my Access Blue Chip Fund can give a negative 40.43%. So this is how you can look into the risk. As we all know, returns, if we want returns, we have to pay it for something. So we have to pay it with the risk. So this particular risk can be gauged by volatility, and volatility can be upside and downside. So that's the reason a value at risk model can be more accurate and more appropriate when you want to gauge a risk of an asset. So this particular model is also available into the portfolio section altogether, and you can also access this for all the mutual funds available into this category. Similarly, for historical value at risk, it is based on the historical performances, historical returns of the asset, and the for implied value at risk, it is based upon the historical volatility. So where you type in 99, according to the historical volatility, you will have a negative 35.97% risk. So this is how you can see the performance statistics of any particular mutual funds. Either it can be an hybrid fund, either it can be a debt fund. It doesn't matter. The entire analytics is same for every single mutual fund. Then what we go for ahead is a comparative analytics between the benchmark. So now we all know that comparisons between the analysis, comparisons between the benchmark can be a key to actually see if we are beating the benchmark or not. So here you can see accordingly that we have an annual return over benchmark of 1.99%, and this tracking error will give you a lot of information if you are looking into ETFs or on index funds, where it is where you want to see the tracking error between the index and the fund. So this is very very much useful. And then we have up capture and down capture ratio. So up capture and down capture ratios gives you an overview as to how the asset have performed when when the benchmark was up. So as you can see, within the return period in the February 2020 2011, the benchmark was up by 2.24%. In our asset, which is Axis Blue Chip, it was up by 2.43%. So this behavior of our asset against the benchmark can be seen in the up capture ratio. And similarly, the same fundamentals are applied to the down capture ratio, where you can see that what was the behavior of our asset when the benchmark was down. So here you can see the benchmark was negative 1.02% in April 2011, and our asset was 0.62. Then we have a monthly chart and a yearly chart where you can see the simple returns. These are all the simple returns of every single month back tested from the start date. And these are all the yearly chart for every single year, calendar years back tested. And then we have the statistics of the same. So statistics gives us the overview as to what was our percentage between the number of months which are up, which is 91, and what are the down down months, where you can see so how much percentage we are having a negative return in the monthly format. Here you can see that it is 32.09%. This is very very useful information to understand that either our asset will beat the benchmark or not, and how is our behavior of Axis Blue Chip Fund to against the benchmark. And you can change the benchmark as per needed in this tab. You can go for BSE, NSE, whatever it is needed. As of now, we have Nifty 100 in this particular scenario. And here we have also given a value. So you can type in, let's say, 10 lakhs, and the 10 lakhs has been accumulated to 43 lakhs in this period of time. So this gives us a brief overview as to how the fund has performed and how we should look into the fund and what are the underlying risk of this entire fund. Then we have an asset allocation. And this is a very, very important, important part where we have to check whether, whether the fund which we are suggesting to our client is actually solving his portfolio problem. Let's say a client is having a high large cap exposure. Would we really want to suggest a fund which is having a high large cap exposure? So this particular analysis will help us to gauge in what type of fund is this. Is it a sectoral fund? Where is the concentration? Where is the equity sectors? So these all things are available in the asset allocation. The first thing which we are given here is an overview. So within overview, what you can do is you can check in what are the equity holdings. You can click on equity and you can see all the equity holdings. So these are all the equity holdings which this fund holds. Then we have reverse repo. we have fixed deposit, and we have net CA and others. Then what we can do is we can check what are the position changes by month. So now the position changes by month. You can see accordingly for every single month for the past 12 months, what were the position changes by the fund manager. So you can see accordingly what are the increases, what are the decreases, what are the positions added, and the positions removed as Zomato Limited was removed. And you can just click on this and check for every single month. So let's say you're checking for 31st July 2021. So you can click on this particular month and you can see the positions added and the positions removed. So as you can see, the derivative stock future of Bajaj Auto was actually added in this particular month. And then you can see the positions over time. So now you want to see the broad overview as to what are the positions held and what are the positions removed. So that what you can do is you can click on positions over time. To see according to the sector, if you want to see, you can just click on this sectoral button here, and you can see according to the sector. So according to the sector, the banking is having the highest allocation, from 31st January 2021, and till here banking is still the highest. Then we have IT software, finance, retail, pharmaceuticals, and what are the sectoral changes happening in this entire fund. Now we can also look into via security. So individual securities asset allocation changes can be seen for over time for like 12 months period. So you can see accordingly that Bajaj Finance and Infosys are having a very high exposure in asset. So here you can see 9.26% and 9.22%. Then you can see ICICI Bank, Avenue Supermart, you can see TCS. So these are all the positions over time, and this every single data can be downloaded in Excel. This table can be downloaded, and then you can actually see the concentration. So the position concentration is very, very useful. As you can see, this is a blue chip fund. So, most of that will be into large cap. And here, what we can directly see is that what are the top 3 positions and how much positions we are holding. So if you see the overview here, the top 3 of the holdings which we have is this 3, Bajaj Finance, Infosys, and ICICI Bank. These are the 3 which we are holding, and these are the 3 concentration which accounts for 27.50%. So that is what our top 3 are accounting for. And then you can directly see what are the equity exposures. So as you can see, most of it are into large cap, as this is a purely blue chip large cap fund. Then we have equity sectors, where we can see all the sector exposures. So we can actually analyze that how many banking stocks we have. So we just have to click on this. We have 4 banking stocks. If you want to know the IT software stocks, we can click on this. We can click on finance, we can click on retail. So this, once you click on this graph, you can see all the stocks underlying in them. And this entire data can be downloaded in Excel. So entire sectoral exposure. Now let's talk about debt. Debt here, obviously it will be very, very minimal because of because this is an equity fund. Let's load in a debt fund. Let's load maybe a money market fund. Okay. So this is a debt fund, and obviously, as you can see here, the entire asset allocation will be completely different. But first, if you want to check the average maturity, the duration for this particular fund, HDFC Money Market, what you can do is first you can load this fund, and then you can click on this graph. Once you click on this graph, this set of graph will be available to you, where you can see in the green the duration, how the duration has been from from the past few years, and how the average maturity has been for the past few years. And here you can see the YTM. So YTM has been shot up from 0.48 to you can see here 3.96. So this entire trend line we have given here into this graph, and this can be downloaded in Excel. So for debt, if you want to download this, you just have to click on this button, and this gets downloaded. And similarly, if you want to see the asset allocation of this debt, what you can do here is you can just click on asset allocation. And similarly, what you have seen for Axis Blue Chip, that you can see it for the debt sector. So, the most of the debt sectors we have in debt others and T bills, treasury bills, and we have government securities. And here you can see the fund credit ratings. So here you can see AAA equivalent, sovereign, and net CA and others. Similarly, you can see the overview of all the debt securities, and you can even click on every single debt securities according to the rating. So let's say I want to see all the commercial paper for this money market fund. I can click on commercial papers, and all the commercial paper holdings can be seen to you. Similarly, you can see for certificate of deposits, treasury bills, government securities, reverse repo, everything is visible to you. And this entire thing can be downloaded in Excel directly from here. As you have all seen, the equity sectors, it doesn't account for a debt funds. So obviously, there is a different set of scenarios and different set of uh, analysis for the debt funds than an equity fund. And if you really want to check the proper analysis of a debt fund, what you can do is you can do a scenario analysis, because scenario analysis is, a very, very powerful way to understand how our debt fund is performing according to those scenarios. Let's say a Fed rate hike. So we can see accordingly that this was our HDFC money market fund against the CCIL bond index. And by the way, Engine is actually defaulting the benchmark according to the fund. So accordingly, if you see this is a debt fund, so we have already directly benchmarked it with the CCIL bond index. And here you can see accordingly that our excess return over benchmark was better than the CCIL bond index. Similarly, you can make your own scenarios. You can choose in as per maybe a Russia Ukraine war, or maybe some economic policies by Indian government or a US government, and that policies can be added here. So that date, particularly that date, can be added here, and then you can actually backtest those scenarios against our money market fund. So these are the entire things what you can do for equity and debt funds. We have a lot of things what we can explore for fund analytics. One of them is a peer analysis, which you can do for even an equity fund, even a debt fund, even a hybrid fund. So in this peer analysis, the most important thing here is to actually see how we are actually comparable with a SEBI classification average. I definitely agree that when we compare it with a benchmark. A benchmark comparison is a very good way to compare our fund, but there is another way to compare it with our peers. So this peers gives you a brief overview as to how we are performing according to the average, and what is our Sharpe ratio value, what is our volatility, what is our YTD and MTD. So we can already see accordingly that if I have chosen HDFC money market fund, then how I am actually competing with others in this money market fund segment. So here you can see the entire details. Similarly, we also have fund details. It's a basic fund details. It gives us the objectives and the fund manager. And we have the rolling analysis and the distribution for the same. So the rolling analysis, I'm going to discuss rolling analysis, with a session. We are going to have a separate session for rolling analysis, because it's a very, very in-depth topic. But to give you a brief overview, that in the rolling analysis, you can see the expectancy as to what was our average, what is our volatility, what is our highs and lows within this rolling period of 1 year, 2 year, and 3 year. So what you can do is you can run this, this particular periods, and you can keep it as an absolute or annualized, and then you can see the graph according to this. We have also given the distribution for the rolling analysis, and in the distribution, you can actually check in for all the 3 periods. These are all the 3 use cases what you can do for every single period. And the most important thing is the rolling volatility analysis. So we have given rolling returns analysis. You can also compare funds with returns analysis. With volatility, you can know lots of things, that how our rolling volatility has been since the start of this particular fund. And you can see accordingly for these 3 periods how the volatility has increased since the start of the COVID pandemic, and how it has decreased in this manner as well. So this particular volatility analysis will be discussed in depth in another session, and there we can actually discuss lots of things about how we can use this volatility to actually gauge the entirety of the fund. So this is the rolling analysis we have. We also have distributions. A distribution tells us that, within, let's load an equity fund to show you the distribution. So as you can see, I'm loading a blue chip fund. Any blue chip fund will do. So okay, let's go for a direct as of now. So to just see accordingly that, if you want to see what are my monthly returns for this fund, let's say a use case we have, what we can do is we can just click in 1 month. We can keep interval as small as possible, maybe 10 or maybe 20, to see what are our intervals, and then we can run it. So my monthly returns are these frequency tables. Now these are all the monthly backtesting. Obviously, we are doing daily backtesting, but this particular range which I have chosen is a return period of monthly. And there you can see that my most of my distribution is between -4 to +4, or you can say +6. So my expectancy for this particular fund should be, for a monthly return period, should not be more than 6% or more than 8%, because it hasn't backtested at all after 6% for a monthly period. And this you can do it for even a daily period or even a weekly period. So for doing that, what you can do is you can click on 1 week and run this. And as you can see, this is the weekly backtesting returns. So this just shows you that these are the returns, and this is how you should expect if you are actually going for a for this particular fund. And in the weekly period as well, I can just hover this mouse and I can see accordingly that this is my interval from 0.4 to 2.3, and this is my frequency. So there are 184 weeks I have backtested between these intervals. So this is what it means. If you choose in daily, it will show you the similar thing. You run in and you can see the frequency of the same. We have also given the mean, median, and mode, and the skewness. The skewness, if it is negative, it actually the entire graph goes into right corner, and if the skewness is positive, the graph goes into the left corner in this side. And there we have also discussed scenario analysis, and one of the most important one which I would definitely consult every one of you is to look for drawdowns. Drawdowns is one particular one particular function which will be very, very useful when you want to see the risk, what are the losses we have, and how many days it took to recover. So let's say for a use case we have a loss of 30.10%, and it took 164 days to recover. And when we are going to make a portfolio, we are going to ensure this particular loss should be lesser. So that is what our main aim is. To make a portfolio, we are not going to suggest 1 or 2 funds. We are going to suggest 4 or 5 funds. And if we are suggesting those 4 or 5 funds, we are going to ensure that days to recover shall be reduced, and this particular still ongoing, still recovering kind of a thing shall be reduced as well, so that we are going to convey to our client that whatever analysis we have done, we have made a particular portfolio better for you in terms of recovery, in terms of the losses incurred, and in terms of recovery. We know that the losses are gonna happen 100 years down the line, and we cannot stop that. But what we can stop is how much we can how much steps we can take to recover this entire portfolio. So this is the thing what you can look into for this particular fund, and then you can even see the beta analysis. So for the beta analysis, we have given the relationship to the benchmark. Whatever benchmark you choose, you can see the beta for the same, and the correlation according to the benchmark. So we have given this trend line as well. So that is it for the entire analytics of the fund. So before starting an FAQ section, I'm just gonna skim through 2-3 things more. You can make a report, a 3-pager, a 2-pager, and a 1-pager report. I'm just gonna show you a detailed report of the same. So this is the detailed report what you can make for your client, and you can also make a PowerPoint report. Now, PowerPoint report is very, very useful because not everyone can have time to create singular PowerPoint reports for for all the clients. You might be able to create PowerPoint report for a portfolio, but every single fund, if you want to create a PowerPoint portfolio, it's going to be very hectic task. What we have given is you just have to click on this button and the PowerPoint report is loaded anyways. So this report is a customizable report. You can share it with your client. Let's say you're going to convince your client with one particular fund, then you can use this, powerful PowerPoint PPT to actually convey the story you want to convey as to why Axis Blue Chip Fund, or why HDFC Money Market Fund, or why a Balance Advantage Fund altogether. So even in a Balance Advantage Fund, if you load a Balance Advantage Fund, you will get similar analytics, you will get similar asset allocation, but there will be a bit of a hybrid nature where you will see a bit of equity and you will also see the debt allocation as well. So these are the entire things which this session I wanted to discuss. And you can also do SIP analysis. You can click on this and directly go for an SIP analysis. We're gonna have this SIP analysis later on, but you can do that in any section. And you can also obviously you can also do custom benchmarking. So custom benchmarking is altogether another session, because it's very huge. If we have a conversation about custom benchmarking, it's very, very useful. If you have a hybrid fund and you want to have an own set of benchmark to compare that fund, what you can do is you can just click on this custom and you can click here to add and manage those custom indices. So I've already added some of the custom indices here, which I can download the price series of, and I can also choose in any such indices for my customization. Let's say I'm choosing Nifty 50 and I'm adding them. So right now I'm just adding 3 indices to show you how customization can happen. Let's say I'm adding oil and gas as an example, and let's say another one from BSE, maybe uh, basic materials, let's say small cap. So now I have a custom indices which is completely unrelated to anything. I'm just gonna add this as 20%. Let's say I want to have an exposure of 40% in large cap, and then 20% here, and then 40% in a small cap. So this is gonna give me a flexibility to you know to benchmark with any funds available in the pool of SEBI classification. I can name it as my own, and then I can save this custom indices. Once I have saved this entire custom indices, I can actually definitely I can use it for any analytics, even a fund analytics, even a portfolio analytics. It doesn't matter. This hybrid which I have made it for myself, I can see that I can actually compare this Axis Blue Chip Fund with this custom indices I have. So this is it for the entire session, and let's go ahead with the Q&A session. We have Arunab sir on board, and let's shoot the questions. We are gonna answer them.
Umer, I would like to ask you one question with regard to value at risk, where historical returns and implied returns are there. It is on yearly basis or since inception, value at risk?
Okay, definitely, sir.
Hi,
Yeah.
hi, Arunab here. So the input data to both VAR calculations is however much data you've loaded. So in this screen that you're currently looking at, if you just scroll up, you see the data is from 5th Jan 2010 to today. So that's the input data. And the number that you see, the VAR is always expressed as an annualized number.
Okay. Okay. So the data is considered from the date which is written above, right?
Yes, correct.
Okay. Thank you.
One more thing, sorry, I'll add to this is when you look at this particular screen, you can change the dates. But when you're looking at a screener scenario where lots of funds are being shown together, at that point, it will actually show you the VAR since inception.
Can you repeat? I could not understand that.
Yeah. So when we basically see results of a fund in the screener section, in the funds,
Right.
there the VARs are pre-calculated since inception. Umair, if you could just quickly just go to the screener for a second here. So here when you see this VAR H and VAR I, these are all since inception, because there is of course in this screen there is no common date.
Arunji, can you just in this add these two columns of upward and downward in screener also, upward ratio and downward ratio? Otherwise, you have to go to individual funds and then check what is upward, downward. Here it will help us.
See, the
screening.
problem with that is up capture ratio and down capture ratio are both relative stats. So they are against a particular benchmark. Now, when you're screening, there is no underlying benchmark there. You could have easily selected 3-4 different SEBI categories here.
Right.
And in that case, one up capture ratio will not be comparable to the other. So one place that we could potentially add it is in the compare section, where you have these pink columns, which are relative columns. So we can look into that, adding up and down capture ratios here. And obviously in that case, the up and down capture ratios will be against the common benchmark that has been chosen.
Correct. Now, I was talking in reference to the category averages, which is, it's let's say if I'm seeing large and mid cap,
sure,
then up and down ratio will be helpful to us, to see that what is aggressive or defensive the fund is.
Okay, fine, understand. So in that case, we'll use the category benchmark basically.
Correct.
Yeah, okay, yeah. That can be done. We can start with adding them in the compare section. The only issue with the category benchmarks is not all of the category benchmarks are publicly available, and our data provider is basically going to be getting back to us with it soon. Right now, most of the funds, the actual SEBI allocated benchmarks, the new category benchmarks are being shown. But in some cases, there are some CRISIL indices there which are not publicly available. So as soon as we have that data, we'll be able to do it.
Okay, thanks.
Any other questions?
There's one on the chat. Says, can we have a variety of funds and check their performance versus their benchmark NPS screens? So yeah, we are actually at the right screen for that. So let's say we were looking at these bunch of looks like flexi cap funds or something. So here you can add a benchmark to this. So he's already got one. Nifty 50 is there. You can add more also, not just one. So here again, you can basically compare many funds and many benchmarks in one place. And also, all of this list can be compared to one base benchmark, which you can choose on the top. So in this case, we are comparing all of the things in the list with whatever we choose in this drop down. And the results of that will be in the pink columns. There's a section question saying rolling analysis. Will we have a separate session? Yes, definitely. That's a pretty big topic. So we will dedicate one of our sessions only to rolling analysis.
Whenever we see particular position over time, where different months are shown for different scripts, can we freeze the columns of the company name?
Yes. That's a good point. I think when you scroll right, they get stuck. Yeah. I understand. Let's just have a look at it. I think you mean this, right? This table, when you scroll right, so scroll right, Umair. Yeah, that's what you mean, right?
Yes, that's
yes. Okay, definitely. We'll Umair, let's write that down in that list. Yeah.
Yes, I have written it down.
Okay.
Thank you.
There's another, can we have all of the comparison in chart form? Yes. So if we go back to funds compare, Umair, we can show them the performance chart tab. So whatever things you add in here, be it funds, index, whatever you want, all of them will show up in this particular chart. And you can change the dates, you can take a screenshot of this and things like that.
There's another question. Can we have 1 week return on the fund comparison sheet?
Yes. So let's just look at the fund list again. So we've got 1 day and then we got 1 month. Okay. So So with 1 week, somebody had asked for this before, but there's a bit of a weird issue with 1 week is, what do we consider 1 week? I mean, today is Friday. So do we just go weekday wise? Because obviously we have to deal with holidays also. So, what we could do is, we could do it in two ways. 1 week is, if today is a Friday, we're going to find the last Friday and then do the return from there. Or we can do the last 5 working days. But yeah, I think this should be fine, Mir. I think we can add this to the list. 1 week should be okay.
Got it. Have added.
Can we sync? Okay, can we sync actual data via Investwell software? So the short answer is we would really love to. We just need Investwell to agree to it. So we have spoken to them a couple of times. If you are an Investwell user, we would suggest that you also ask them if they're open to it. Just so we're clear what we're talking about here, Umair, if you could go to the client section. We have already successfully integrated with one back office system called Fund Expert. So this is very, very similar to what you might be using on Investwell. We do provide discounted subscriptions to Fund Experts through Engine. And in that case, what happens is you just put your username password on the bottom right here. And once you've done that, every night, Engine will sync all your client data from Fund Expert. And Fund Expert obviously has all of your data from RTAs. So you don't have to worry. Whenever you log in the morning, you will see that the data is up to date. We have tried to kind of do this exact same integration with Investwell. So far, they didn't want to go ahead with a complete integration. But of course, if you're an Investwell user and you do put some pressure, that might help us out. So we are definitely open to doing that. We've done it with another back office system called Finexa as well. Okay, so there is another question. When we see sector securities across one, it will be better if we have a pivot of the sector. Yeah, with pivots, we could probably build something like that. I would still suggest that if you want to do pivots, there is literally nothing obviously better than Excel. And no matter how hard we try, I don't think we can do it as well as Excel has done it. What we can do is give you various different versions of downloads. So if you have a kind of a suggested format, we could definitely work on that.
Yeah. There's a side में से point डालते तो नीचे सब आता है ये चार.
Another question is download cash statements to measure the performance. So yeah, so we on Engine, we are always looking at the latest portfolios. So if you're asking about using a cash detail statement which has all the transactions, and then using those transactions and calculating the actual performance that has been earned by that particular client, that is not something we do. We always look at the latest holding of a client and then analyze it further, as you can see right now. So performance calculation or P&L calculation isn't something that Engine currently does. That is, of course, provided by a back office in terms of for the XIRR for a particular client, maybe, for example. So there's another question saying, if you want to incorporate bank FD as a category into a portfolio, how do you do it? So there is one way to do it. What you would do is you would go to My Securities and you would upload a data series which represents the growth of, let's say, 100 on the base of the FD rate over time. And you basically save it, call it something, and you create a custom security which represents the NAV of a bank FD. Once you have done that, you go to portfolios and you pick a couple of funds to add to portfolios, etc. And then you put the rest of it into FD. And the way you add the FD is you search your securities. So when you start typing here, everything, any custom security that you have saved in that My Security section will show up here. and the returns of whatever returns you have uploaded will be used for the backtest. So in this way, you can actually allocate X amount of your portfolio to a custom security that you just created. So in this case, what Umair has done is he's allocated 9.09% to my PMS. Yes, you should do it for the oldest part of your portfolio for sure. I mean, ideally, if it's a one-time thing you're doing, then just do it for as long as you can, because then you can keep reusing it.
Any more questions from everyone?
Yeah, our pleasure, sir. We will continue to do these sessions. So, please do come and join us whenever you have time. And we will also be recording each of these sessions and putting them up on YouTube. We do have a YouTube channel, which we'll send you a link to very soon. So all of our sessions will be available there as well. Yes, of course, we will send out an email as soon as our next topic is decided. Rolling analysis should definitely be coming very soon. Mr. Pawan, yes, we will share it very soon. We are in the process of adding a few more things to it. You can probably find it anyway because it's live, but just give us a few more days and we'll just send an email out. And we'll also put a link into the application.
So far as whenever distribution and rolling analysis are same, how do we communicate the same data to our customers when we show this distribution analysis and all?
So distribution, one easy method of kind of explaining in layman's terms is if you make it, let's say, yeah, let's make it 1 month and let's make it 10. Yeah. So this, if you look at the highest bar, this is saying that 45%, 45.83, so 45% of the time, your 1 month returns are between 0.32 and 4.7%. So that's a pretty solid statement to make. And this is true because we are analyzing historical returns. And we are saying that almost half the time, my months are between 0.3 and plus 0.3 and plus 4.7. So that's pretty good. And in this case, we can say, there's a 45% probability that your returns will lie within this range. So this should help them a little bit. And also in this case, you can look at the little small bar on the left, far on the left. So this one, I think the frequency, may just go on to the bar if you can with your mouse, the one right on the left at the negative side. Yeah, this one. So so there is 1 month, which is between -30 and -26. So that must be a pretty bad month, but there's only one of them. So that's what we would kind of call a tail of a distribution. And obviously a left tail is not good because it's on the left side, the negative side. A right tail is nice to have, but you don't want a very fat tail on the left side. So this is quite insightful and just a very different way of analyzing the returns. Now we are analyzing 1 month returns, but we can repeat the process and say, let's look at a week and let's look at kind of what kind of percentages do we get. Again, almost half of the returns are positive. That's a pretty even more insightful statement that if I look at all the weekly periods, 46% of them are positive. That's actually quite good. And you can change the number of intervals. If you do that, you'll see what happens. Let's make it a bit bigger again. Yes. So the intervals are getting smaller. They're evenly spaced, these intervals. So
what does that interval suggest?
Sorry?
In what does that interval suggest? Number of intervals?
So number of
When-
intervals means you see the x-axis at the bottom. That is, you're going from the most negative to the most positive, right? So you can see minus 16.31 and the top you can see 9.77 positive. That is the entire range of all weekly returns. So the worst
Okay.
weekly return is that side and the best is in 9.7 side. So we take the range and we chop it up into 20 equal buckets, if you want, or bins.
Okay.
So bins is basically just, quant technology terminology, but basically there are 20 equally spaced intervals. Then we go and count every weekly return and see into which interval does it fall.
Correct.
And so the tallest bar, that is the interval into which 168 weeks have fallen.
Correct.
So we know that this is most likely to happen. And again, a lot of questions we get, about this, that we are looking at historical data. But as we have said many times before, this is all there is. Historical data is all there is. So it's all, the only thing we can do is analyze it in different ways. So this is actually every single probability measure in the world is based on historical data. So, here what we're doing is just trying to figure out our percentages and hoping that our percentages are on the right track.
Correct.
So that's how distribution can be useful, to even talk with somebody who has a little bit of interest.
Okay. So basically, every time by default, the number of intervals is 100. So it is for the first time I'm understanding this.
Yeah.
So whenever I see 100, we see a tall tower,
Yes,
like Burj
yes.
Khalifa, and we never know what is happening.
Yes, maybe we should change the default here, right? But again, the 100 is default. It means nothing. It can be 10,000. It's up to you basically to change it.
Any ideal means as per your experience in the.
I think the more you get into it, the number of intervals as they increase, they can give more information based on how you want. But I think from explaining to a client who may not have this much knowledge about stats, I think it's easier to use 10 intervals or 20 maximum, that way you can actually stop at a bar and explain them what they're really looking at. Because this is something that we can explain to someone that, look, 46% of the time, your weekly returns are between 0.15 and plus 2.9, plus 2.9. That's something anybody will understand. So that's why you should use small intervals, and as they understand more, then you can, use larger intervals as well. Larger intervals gives you a much better shape of the chart. Let's do 1,000. So you'll actually start to see a shape. You can actually, in stats later on, you can actually draw a line.
So this is a bell curve only itself.
Yes, exactly. So you can see a bell curve is kind of forming. The shape is forming here.
Correct. Great. So my suggestion would be that you keep a smaller interval by default. Instead of 100, you should keep it somewhere 20 or
Definitely.
20. I'm using understanding it for the first time.
Perfect. Definitely, we will do that.
Thank you.
No problem. Another question is that we're discussing Red Vision. Yes, we have actually got into touch with Red Vision as well about exactly the same thing, building the link that we did with Fund Expert. We are, of course, very excited if that happens. We did not get much response back, but as I said, if you guys are using Red Vision, if you kind of nudge them on a little bit, that why don't, because I don't know what the issue is. Of course, there is no overlap really. As you can see, our system does not calculate transaction P&L. This is what their system does. We are not doing things like capital gains reports, and we have no interest in going into a back office function anyway. So there is no risk to their, to their system either here. Our system will not work without your Red Vision data. Our system will not work without Investwell data. So hopefully they can, kind of collaborate with us, and it will be good for both of us. So if they get some nudge from you guys as their users, that will help the conversation.
Arnab, this is Padmanabhan.
Hi, sir.
See, actually, I wanted to check, whether that NAV also listed. Say, for example, today, especially in the last 6 months, roughly 20-25 NFO came to the market, all are below par value. Generally, the investors are interested to invest whenever it's less than 10 rupees or no, even at par value. So, is there any way we can download the NAV which is less than 10, or that is one request, or in the normal compare screen, you have included AUM of the funds. Why don't you include the NAV also? So, that can also help us.
Yes, sir. The adding the NAV column in this compare list, this
Yeah.
is already an ongoing request for somebody else who wanted it for something else. So this is definitely happening before the end of this month. Umair, this is correct, right? We discussed this before about some
Yes,
Yeah.
it's definitely happening.
Yeah. So the NAV column will come for sure, sir.
And say for example, this particular, there are so many columns are there. No, you should also allow us to choose what we want or what we don't want. Say for example, instead of so I prefer, instead of that 1 day, 1 month, 3 months, for example, 2 years, 4 years. So most of them are giving 1, 3, 5, 7, 10. This is the default kind of this thing. Why not 1, 2, 3, 4 or whatever the year I wanted to choose.
Understood.
So that would be great. If it's more of a selection process. Instead of giving a default screen, if you give a selection, probably I can choose those things that I can.
What suits.
Yeah.
Yeah. So we will do that. One thing is there, Umair, if you go to screen, I think the NAV column, I think it has a NAV column. Just look right in the So sir, you can, if you want, even now, you can select the categories and you can sort. Does the sorting work on the NAV? Just check. Yeah, it does. So this way you can actually
can I get all the equity? All the NAV,
right? Yeah. Just deselect everything.
Also in the screen. Okay. Fine.
All equity funds and NAVs. No, so this is descending, right? So let's do ascending. I believe that is what you're looking for, right?
Yeah, NAV. Yeah, NAV. Yeah.
There
So
it
it is in the screener.
Yes.
Screen. Yeah. Okay.
So this is what you wanted, sir. Below 10.
Yeah. Yes.
Yeah.
Yes.
And
So this will be.
There you can get it. Yeah.
Padmanabhanji, it will be helpful to everyone. Thanks for sharing.
No. See, whatever I am asking you, it is not for me. It is for the whole community only.
Perfect. Sir, it is great when a question gets answered. Nobody knew. We went around the system and found it. So it's
correct.
Correct.
Good afternoon, Arnav.
Good afternoon, sir.
I am Lalit here.
Hello.
I am finding some difficulty when we select the compare list and we take the, for example, small cap. That selection category.
Yeah.
Instead of large cap, if we saw, there are a lot of AMCs and funds which got no more into existence.
Oh, I see. There are some older funds.
Older funds, and then can we control that bonus and growth component?
Yes, sir. We'll check that. Unfortunately, they also get registered in our database as regular funds and open-ended. So we'll have to find some way to Umair, just quickly try to add small cap category. I think some of them must be getting stuck or something. Let's see. So segregated, we have definitely removed this, I know, because they were causing problems.
If we take Sundaram, you will find 2 Sundaram and 2 principals.
Okay. So I think
you have to remove the principal. Actually, principal is not there. Still, principal is coming.
The principal small cap fund, yeah. Okay.
And Sundaram Institute is not there.
Yeah, so that institutional option as well as especially Nippon bonus, that and all is not
by 1 year. You sorted by 1 year.
Yeah. So I think relative column. So if you sort by age.
No, you sort by 1 year.
Acha, 1 year return, huh?
So here you see 1 year ascending reverse. Yeah. Now principal small capital is not at all into existence. Sundaram small cap institution is not at all in existence.
Right. Just click on principal small cap. Where?
Sir, it got merged in January itself.
Okay.
No, actually,
I
as
think-
on 31st, it will be there.
Okay, it's as of 31st. Yeah, it's older.
Because that was the time
Yeah.
it was moved to Sundaram. So
Okay.
actually, this should be removed.
Yeah.
This
No,
should be
sir.
removed.
We will automatically. What we will do is it will not load any funds that doesn't have a NAV in the last X number of days. So we've had this actual functionality in the screener. Just go back to the screener
Okay.
for a second. So we will add the same thing here. But could you give us some idea, sir? Like if automatically we want to do this, if a NAV has not been published for, let's say, how many days can we just consider it?
30 days is good enough.
30 days
Maximum
good
1
enough?
week. Maximum 1 week. Because
week,
international fund normally takes maximum 1 week.
Okay,
No,
so
no,
just to
no,
be
no.
on the safe side, if we in the compare section, when you load a category, it will not load anything that is not published a NAV in the last, say, 10 days. Then these guys will
Yeah.
not come automatically.
At least in equity you can do, sir.
Okay, fine.
Because debt there will be segregated folio, they will continue to have NAV, we will not be liquidated.
Yeah.
But in equity fund, 1 week or 15 days is more than sufficient.
Fine.
And if we are able to delete that growth bonus option, if available institutional option. See, if you see this column, if we send to customer, yesterday only some same thing happened.
Yeah.
And I ended up putting in Sundaram small cap. I forgot to see Instg.
Got it. Okay, the
So-
institution needs to be here. Yeah, fine.
Yeah, institution as well as Nippon bonus also.
Nippon bonus is
Nippon
there.
India bonus, this
Yeah,
one.
these B. Yeah.
One more fund is there, sir,
Yeah.
downstairs. Sundaram is there, one more. If you scroll down, please.
Sundaram institutional.
Sundaram regular is there. Then Aditya Birla, you will see two.
No, Aditya Birla only one will be there.
In
Only
a tax
Sundaram,
plan-
see actually,
in tax
Sundaram
plan,
institution.
in ELSS format, for HDFC, we see two schemes. For Birla, we see two schemes.
Okay.
In ELSS category.
What we can do is whenever there is a bonus fund, there is a bracket open, B bracket close. This is a key.
Yes, not required.
We should remove that. No, we're fine.
No,
So that's
we
easy
don't
for us to
require-
filter, right?
Correct.
And
Similarly
whenever
for
there is easy for our
sir,
system to
large
filter.
cap, large cap fund, that Edelweiss large cap, some A, B, C kind of this thing.
Yeah. Okay.
If you load a large cap,
Yeah.
there is a Edelweiss, Edelweiss, I think A, B, C kind of this thing. So it's unnecessary confusion. It's only
Yeah.
one fund and everybody is.
So these we can
tracking.
remove from the back end. The bonus ones are looking simple to remove. Institution also, if there is a dash in front of everything, that
Yes.
also we can use a filter. We can remove that also.
Yes.
We'll check the large cap.
And NAV, as you have said, more than 15 days. It
Yes,
can be avoided.
that thing will also be there. Yes.
In ELSS, HDFC, there are two schemes. In Aditya Birla, there are two schemes.
Acha, just try ELSS here.
But sir, in that case, the funds are there. People have not withdrawn, so
But we are not able to, we cannot purchase. So see,
we
ELSS
cannot
plan
purchase.
B, A, B, C. And you see Aditya Birla in ELSS, you will see, I think in HDFC, only one fund is there now.
no, there are two in HDFC also.
Actually, there are three in LSS, but we'll not take only two.
No, so
That
here what
return-
will happen is the
Hmm.
fund is not going to be removed from our database. It just will not load in this list. That's all.
That's it. That's what we want for our sake. We should be able to see whatever is available for sale.
Yeah.
Where we can purchase. This was one deterrent factor I thought with last week.
Perfect.
From
We
last
will
week.
definitely look into it. And whoever is
And-
here who is using Investwell or Red Vision, please do when you have a 5 minutes or something, just give them a call and tell them to be open to integration, because from our side it will not take more than a few days to get it up, and our system is
Okay.
completely ready. So,
I am on OFA, sir.
okay. On what, sir?
OFA.
Okay. So any back office system who is ready to talk, please just get them in touch with us. We are more
Yeah,
than
but
happy to give you
any back office system anybody is using, and you are seeing that it is not there in the system, please let us know. We are very happy to integrate.
I spoke to Mr. Sahu on this from OFA. Hey, why can't you integrate engine with my OFA. So OFA is a back office software which I use for my purpose.
So we have since we have already done and have a very decent experience in doing this, we can do it with anyone.
No,
Just need an API from them.
You are open to everybody. I appreciate that. But when I spoke to Mr. Sahu from OFA side, he will you be integrate engine with you. He said some problem is there. I will not be able to do it. Some issues are there which I don't know. I have spoke 4 months back with this.
Okay,
sir, actually, to be honest, the data is yours, right?
Yeah.
And all we need is, let's say you have 100 clients. All we need is for each of those 100 clients, the name and the fund with the ISIN code and the number of shares currently held. No history, nothing.
Yep.
That's it. And that is something our system will call their system every night saying, for this user, give me all the client names and give me all the funds and ISIN codes and number of shares held today, as of today. That's it. Everything else after that we will take care of. So they just have to create an API for us, which is a very simple task. So that data is there. Now it's a matter of whether or not they agree to, build us that
OFA
link.
has to create an API which you will attach to you.
Yes, which we will call. We will call that API.
Okay. I will speak to Mr. Sahu again and let us see what can be done on this.
Okay, sir. Okay.
Yeah.
Anirudh, have you talked with Finso?
Finso, Dave, didn't you speak to somebody at Finso at some point?
Finso, I'm very close, interacted rather with Rajan Pathak. But Finso is an online transaction platform, and Wealth Magic they have recently bought over. And but prior to Wealth Magic getting sold it off to Finso, we were in touch with Wealth Magic again. They had some reservations in giving us the API. And I think now Finso has since taken up Wealth Magic. They are also not very keen in sharing the API with us because they think that we will get over them faster than what they have done till now. So actually, I do not know what could be the reservation in this case. Even in Finso, Wealth Magic, or maybe Investwell, any one of them. These are not any competitive areas. Like we are not competing anyone. It is like for the benefit of the users, we are trying to make the life of everyone, all the advisors, all the institutions easier. So integration makes everybody's life easier. I don't know why they don't want to share the API. Because this is nothing which has to be confidential. Sharing API is something one of the most easiest tasks of something that they are not owning. So customers are owned by the IFAs, and they are just the service providers or integrator. If they are giving the API to us or to any one of them for the ease of work, why don't they want to share the API? We just don't understand. But anyway, we have talked to Sunil Jain, Investwell. We have talked to several others. Some agreed, we have done it. Some did not agree, we could not do it. And we are still trying to make sure that we have maximum APIs integrated with us and back office integrated with us.
And from our side also, we'll try to push whatever.
You just let us know, sir. Anybody you want us to talk to, we will talk and we will just finish it off. It takes 1 or 2 day time to finish off from our side the discussion, and then the integration and all the stuff is just a matter of time and it's done.
And we will provide all technical information, everything we will provide. They don't have to worry. I mean, it's a very basic task. It's not a big deal.
I think to some extent the path has been cleared because if Mr. Jain has agreed to integrate Investwell, then other service providers should not object to it. That's what I feel. I will also talk to Mr. Sahu and I will share his number with you also.
Yeah. If you could do that, nothing like that.
Yeah. Definitely, it is for benefit of everybody.
It is for the benefit of the users. So no engine, no Investwell, no Wealth Magic. Nobody has any authority to dominate or control your way of life. As simple as that. We can ease your functioning, make your life smoother in terms of advising. But we cannot tell that we will not give you this, we will not give you that.
Obviously, the data belongs to you. It doesn't belong to us.
ऐसा नहीं होता है, मतलब it doesn't happen that way.
Sir, पर fear तो unknown का ही होता है.
Arnab, one more request,
Yes,
see today that contra and value is a separate category. No, actually dynamic asset allocation and BAF, we have combined both, and we are in a position to select BAF stroke dynamic asset allocation, everything in a single this thing. Today, only 3 funds are in the contra.
Right.
Kotak, this one Invesco, and SBI. Only 3 funds are so to check all the performance of value as well as contra. I need to check separately both this thing. So you should allow us to just both the things should come in a same.
Yes, sir. Yes, sir. This is definitely in the list that when you add a category, it will give you a yes or no box where it will say delete the existing things on the list or not. So in that case, you will be able to add 2 categories.
Correct. So that is because today, if I add another category, this everything will go off. Hello.
Hello. Sorry, I couldn't hear you, sir. Please go ahead.
No. Suppose if I today, the small cap is listed. If I add a SEBI category, if I type value or contra, then all the funds, which is listed, it will go off. So I want to add, whatever if I want to add, there should be some add category, some plus button or something like that. No, it would be great.
Yes, so we'll do that next once this is on the list, so they should definitely be done this month. Where when you're adding a category, it will ask you whether or not you want to keep the list that you currently have or you want to clear it. So you can choose.
Correct. Correct. And one more long request, see for that SIP calculation, we are in a position to calculate only for the funds. So whatever the Sensex or Nifty or this thing, anyhow the NAV is available. It should also generate
index SIP, right?
Yeah,
index. Yeah. So this is on the list. So all of this, sir, the 2 things you talked about is definitely this month for sure.
One more suggestion, Arna.
Yes.
Thank you.
Yes. Omar. Yeah. See, it is a very good thing that when we see the front screen and we scroll right to left or left to right, we are constantly seeing the name of the scheme.
Yeah.
Likewise, if we scroll up and down, I would continuously like to see the period, like 1 year, 3 year, 5 years.
Yeah, that's a good point. So we actually, if you go to the screen for 1 second, Umair, I think it's screener this happens. Just scroll down. No, I think you scrolled up. Scroll up all the way outside this box. Take your mouse outside this box. Just go up a little bit. Up. Just scroll up your screen. So you see up. So you see engine markets on the top. Is it up totally? Yeah. Okay, now scroll down inside this box. Yeah, scroll down inside this. So those column names are still showing, right?
Yeah, the same thing I would like to see
on the compare screen. Yes.
Small observation.
Yeah, no. So thank you. These things obviously help with usability. So we'll definitely do that.
Yes,
when we scroll up, that upper line goes up down. Up down scroll.
The up down.
The scrolling up, scrolling down. I don't know.
Yeah. This one, the thing will it will remain.
It should remain actually.
Yeah.
Small observation will happen.
Similarly, category average should be also freezed in the first row.
Yeah, I think I've noticed that also. Yeah. When you open up a category, anyone? Yeah. Acha, no, that is showing. That one is showing.
Here it is shown. If we transfer it to the compare section.
Compare it will. So compare, we'll add that thing in the compare section.
So we will know that 31 funds are there. The volatility average is this. Sharp is 27 on an average.
Yeah.
You can do 2 sigma. Otherwise, you have to write it down somewhere and then do the calculations.
Yeah. Understand. Yeah. Fair enough.
Okay. Thank you.
Thank you so much. If there's no other questions, then we'll end the session for today. If there's anybody else who wants to ask anything.
No, it's okay. From my side, I'm okay.
Perfect. Thank you, sir. I think Umair, you can close up now.
Thank you so much, everyone. We will meet everyone in the next session. So greetings from Engine Research. See you.
Thank you.
One second, Amit, 1 second.
Yes,
I think
yes.
the sessions what we are carrying on this weekly basis, it is really giving a lot of hopes for many new people also. I got 2 phone calls last week who were asking me, they were new users and they asked whether are you satisfied or not. They put me a direct message.
Yes, sir. Yes, sir.
And I am also, whenever I get the notification, I am also sending it to few of my friends. They are also slowly participating. And when they ask fellow distributors, how do we go about? Are you happy with that? How are you using it? Well, it will take some time, but the weekly sessions are going on. The catch up will happen very fast. Only thing you should be dedicated. That was the only suggestion.
Definitely,
Sir,
sir. Definitely.
we are completely dedicated, sir, and thank you so much for your support. We are always there for
No,
the entire
what I
trader
mean,
community.
what I meant is you are already dedicated, but distributor has to be dedicated to this.
Yes, sir.
Yes, yes, yes.
If you are dedicated, if you are in a learning mode, then you will enjoy all these things. But if you are only doing plain sales, I think it doesn't make any sense to look at all these things.
Absolutely,
Yes,
absolutely. I
yes.
fully get you, sir. Fully get you.
And that's what I convey to them. And hopefully people should will get educated themselves and give the best experience to their investors.
Definitely.
Yes, sir. Yes, sir.
We-
Yes,
we
sir.
will do
Yes,
that.
sir. Yes, sir.
Thank you
Absolutely,
so
sir.
much.
Thank you so much,
Thank
sir.
you.
Thank you.
Thank
Thank
you.
you. Thank you.